Yo, 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 what's up, my people? Welcome to Psychological Sundays. I'm your host, Dr. Scottage, and we're gonna get down to business. I'm just gonna scroll through this, and if you guys want to add anything or anything, just let me know. But yeah, we'll get started here. So, like I said, I call this the poop, the pizza, and the profits. So, when you want to have a poop, this is what goes down. Step 1, you go to the washroom, right? Step 1, go to the washroom. Step 2, you pull down your pants.
Door open.
Step 3, you sit on the toilet. Step 4, you have a poop. Maybe you squeeze a little, but you have a poop when you're sitting on the toilet. Step 5, you take some TP off the roll. Step 6, you wipe your bum. Step 7, you flush the toilet, right? So you can see here, to have a successful poop, you have to follow these steps. You go to the washroom, you pull down your pants, you sit on the toilet, you have a poop, you take some toilet paper off the roll, you put it in your hand, you wipe your bum, then you flush the toilet, right? So you could have all of these steps correct, but if you forget to take your pants down, you're going to be in trouble, right? You can't just have a poop without taking your pants off. So you already have things in life where naturally you follow the process perfectly and you follow the steps perfectly and you put them in the right order and you do this every time. And you've done this since you're a child. You don't need to be sophisticated. You don't need to be an adult. You don't need to know really anything about anything. You just go in there, you follow the process. You're doing it naturally. You have a successful poop every time. Thousands of poops now, naturally. You're killing it in the poop department. So yeah, now let's look at making a pizza. You want to make a pizza, right? You want a successful pizza. It goes something like this. You put a pizza crust on the counter. You put maybe pizza sauce on the pizza crust. You add some cheese and toppings on top of the pizza sauce. You turn on the oven and preheat it at 410 degrees. You place the pizza in the oven. Then you let it cook for the time it needs until it's delicious. Same scenario. You can't go in and put pizza sauce on the counter and then put a pizza crust on top of the pizza sauce, right? You put the pizza crust on the counter, you put the sauce on the crust, the cheese and toppings on top of the sauce, you turn the oven on, you let it preheat, you pop the thing in the oven, then you got to let it cook for the time it needs. Bam, successful pizza, right? There's nothing complicated here. But I just want to show you guys that there's already areas in your life where you're following a process and following the steps and following the plan perfectly. And since you're not bringing any emotions to it, you're just doing this, then this, then this, then this, one foot in front of the other. Everything's working out successfully. But then when people come into the market, some days they're doing this, some days they're not. Some days they're wiping with toilet paper, some days they're not wiping with toilet paper. Some days they're pooping in the living room, some days they're pooping in the washroom. And then for some reason they think all this weird shit, and it's like, you knew the plan, you have it written down, but then you went in the market and you did some weird stuff. There's a rule that I like to think of. This is what happens to people, and they'll see an A setup, a perfect setup, like just the perfect setup, but they won't enter. They'll hesitate, and that trade will leave without them. And then they'll jump into a shitty trade and like a B setup or a C setup. And it's like, dude, you just passed up on an A setup. You didn't want to take an A setup, and now you believe you have the right to take a B setup or a C setup? You have no right. If you're passing on A setups, that's it. You're done until another A setup comes, right? And with the setups too, if you have an A setup, you can usually hold for a longer take profit. A B setup, you can't really hold for as long, and a C setup is a get in and get out. But it's basically the A setups you want to take. The A setups have all the steps, and all the steps are in the right order. So now let's just look here. So now, if you want to place a proper trade, we went over the poop example. We went over the pizza example. So now, when you want to place a proper trade, it goes something like this. There's different versions of this. Everyone's going to find their own way to do this, and it's going to be a little bit different for each person, but generally going to be something along these lines. Smash is going to talk a lot more about this today. That's It's the beautiful part of having him here today is that he wants to go over some stuff that's going to help you guys refine the strat and refine the entry steps and how to put everything together and put it in order. But generally, a trade is going to go something like this. You approach the market and you look at higher time frame structure. Is price respecting fair value gaps, sweeping liquidity? Where is price coming from? Where is it probably going to? Next, on the lower time frame, are we in an area of interest? Right? Have we pulled back to an area where it looks like a good opportunity to get in? Has price formed a divergence and taken out early entries? So whenever we look for an entry, in this group anyway, we are looking for divergence to happen. So some people, they're getting in before the divergence is even formed. They say, oh, a divergence is going to form here. I'm going to get in. You got to wait for it. You got to wait for confirmation. You got to wait for the stuff to play out. And then you got to wait for an entry. So after you've done that, it goes something like, oh, let's get rid of this one. Now, price, you know what's going on the higher time frame. On the lower time frame, you've come to your area of interest. Price has formed a divergence. Now, step 4, you place a trade in the market. Step 5, you set your stop loss in the right place and you risk the right amount. Step 6, you set and mark your intended take profit level. Step 7, you let the trade cook and the market structure to speak to you. The 7th step is very important. You don't exit because you feel like exiting. You don't exit because you think you should get out. All the candlesticks are usually printing and making you feel emotional ways. So don't listen to the emotions, listen to the market structure. If we're forming new fair value gaps and prices respecting those fair value gaps, the trade's still good, even if it makes a deep pullback. If we're respecting order blocks, we're respecting fair value gaps, we're respecting breaker blocks, the trade's still good. Who cares if it's pulling back? Don't let that scare you out. So now we'll go down, and you can see from the examples, it's the same for a successful poop as it is for a pizza and it is for a trade. You must follow the steps. The steps must be in the right order. This is non-negotiable if you want consistent success. You would never not follow the process when it comes to having a poop, and you would never switch or leave out some of the steps, right? So why would you with your trades? You're not a child. So this is the most important part, is that most of the people that message me, they message me because they know what to do, but they don't do that. You would never think to not do that when you're having a poop. You would never think. It wouldn't even cross your mind. But with trading, it's emotional and people are afraid they're going to miss a move and all this stuff. So they're constantly changing their strategy without even realizing it. Sometimes especially this happens after people find a few successful trades. They have a few successful trades. Their pride is kicking in, a certain part of the brain's firing, and they feel like they're the man and they know exactly what they're doing. They couldn't make a mistake. And then their brain, since it's in this different state, they start adjusting their strat and leaving parts of the strat out and not waiting for confirmation and not waiting for A+ setups. And they think they're still trading the same thing in the same way, but they're trading a modified, loose version of their strategy. And then they start to take a few losses. And then they hit me up and they're like, bro, I don't know what went wrong. I was so good for these 2 weeks, and then all of a sudden, blah, 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 blah. And it's like, dude, you just started leaving out steps from your plan. All that happened is you didn't look at the higher time frame. You stayed on the lower time frame. You got in way after price already left an area of interest. You tried to trade with a tight little stop loss. You became the liquidity. The market just took you out. It went in the intended direction. And you're messaging me wondering what the problem is? You're totally switched your strat. You're trading a different thing. You're becoming the liquidity. So you'll notice that this kind of stuff will happen when you start trading emotional, or you start there's basically multiple things you can trade. You can trade the market and the market structure, or you can trade your thoughts, or you can trade your emotions, or you can trade your account balance. And some people, they don't realize that they're not trading the market. they'll and I can tell from the way they message me or the way that they say something in the chat. They're like, "Oh, I just thought it was going to go up." Well, you're just trading your ideas. And they're saying, "I feel like getting out," or "I got scared, so I exited." Right? That's just trading your emotions. Their account will be up in profit, and it will be profits they've never seen before, so they'll close. But it's like, dude, you're a million miles away from your take profit. Why are you closing? You're only at 1-to-1 or 1-to-2. You need to hold these trades for longer. And they'll say, well, yeah, I just thought um, it felt like I should get out. Or they'll say, I just wanted my account to be back at break even, so I got out. Well, you're not trading the market. And if you're not even trading the market, how are you going to be consistent? You don't. The strategies are based on trading the market, right? So a lot of people, sad to say, a lot of people, a lot of the time, they're not trading the market. They think they are, and they'll tell you they are, but if you ask them certain questions, they're trading their emotions, they're trading their thoughts, or they're trading their account balance. And until they become a professional and treat it like a business, they'll keep doing this kind of thing. So a professional creates a business plan. A business plan is basically like what we're talking about here. So if we go up, let's just use the fun example. So this is a pooping business plan, right? Step 1, step 2, step 3, step 4, step 5, step 6, step 7, step 8 equals a successful poop. So if you want to have a successful business or a successful poop, you got to follow the steps and you got to put them in the right order. So that's why I'm so mechanical with what I'm doing. I'm trying to remove my emotions, and I'm trying to turn this into a real business. Even though it's professional gambling, I'm trying to make it mechanical in such a way that if this, and this lines up, it doesn't matter what I think. It doesn't matter what I feel like. It doesn't matter if the sun's shining or not shining. It doesn't matter if I have $1,000 account or $100,000 account. If this, and this lines up, I get in. If this, and this doesn't line up, I'm not in. And people say, oh, you want to trade like a robot, blah, blah, blah. You don't want to trade like a robot. You want to trade like a professional. And a professional has a plan, and they stick to the plan regardless. They're not swayed by their emotions. And in fact, most of the real professionals, the people trading $1 million and more, they do the opposite. When they are in a buy and price starts running up huge, their trade's in profit. And when it pulls back, they add on to their position. But an amateur will be in that same buy trade. Price will run in their direction. They'll be all excited that they're in profit. Price will pull back and they'll start feeling sad, bad, negative, afraid, and they'll exit their trade. So the professional is adding on at that pullback, and the amateur is now scared and feeling the red candles, and he exits his position. The trade keeps running. The professional made a lot more because he stacked up his entries, and the amateur is out with half the profits he even had 10 minutes ago when it was at its highest point. So I've been basically under the impression that some parts of trading can be 100% psychological. Not 80%, not 90%, not 50%. I'm talking 100% psychological. The way and the reason Smash takes the trade Smash does is because the ideas that come into Smash's head. The reason someone else exited the trade when Smash stayed in is because they had a different idea in their mind, and so they got out. So that's why I read books like Think and Grow Rich, all those different mindset type things from the 1920s, 1910. These guys had it figured out. They realized to be a Dale Carnegie or to be one of these super, super wealthy people, I'm talking the industrialists and the richest people in the world, you have to be thinking and doing things in a certain way. You can't just all of a sudden get emotional and start changing up your strategy. So our group is I think there's about 125 people in here, and we're very specific to what we do. We are monitoring the higher time frames. We're waiting for price to come to a key level. We want it to sweep out liquidity. We're waiting for the divergence. So for a lot of people that are messaging me and messing around, there's really no excuse for it. And Smash is going to go over more strategy stuff today, so you guys can refine your plan and your list. But just stop thinking about you as an individual trader and start thinking about you're an investment manager, and you manage the account. So since you're business person now and you manage the account, you're just supposed to do what the plan says, regardless if you feel it or not. And in a business, some days the business has expenses and some days the business has money coming in. So if you have a convenience store, some days you have to buy inventory. Some days you have to pay hydro. Some days you have to pay employees. Some days a customer will come in and knock something off the shelf and break it. These are all things that cost you money. And then some days you'll sell stuff and make money. That's all that happens in trading. Your losses aren't losses, they're just expenses. You're running a business here. So don't see your losses as losses. See them as, oh, this is an expense. This is just a time where I have to put money out and I have to stick around so when the next opportunity or customer comes along, I can capitalize on that opportunity. If you follow the plan you have written down and you take a loss, you won't feel like such a loser. You'll feel like the plan it was one of the times the plan doesn't work. The plan's not going to have a 100% success rate. It's not going to work every day. But if you start trading your ideas and your emotions, then when you lose, you'll feel like a loser because it's your idea that lost. And the whole name of this game is to not feel like a loser and to be a boss and to be killing it. So the only way to do that is to run it like a business. So I challenge all of you guys for the upcoming week, make your vision, your plan, your strat, write it down, steps that I have to take in a row, make it plain and stick to that thing no matter what. If you start looking at trades, don't forget the next trade. Forget anything like that. Forget putting so much pressure on one single trade. Look at everything in groups of 20 trades. Follow the plan for 20 trades, 30 trades, and then see. You'll see some trades are wins, some trades are losses. I don't know which ones are going to be wins and which ones are going to be losses. But if I stick to the plan, I know over a while I'm going to get more wins than losses. So here, I'll just do another example for you guys. Let's delete this. Let's just call this poker. Delete this. So I'm going to explain something to you in poker. Since trading is actually professional gambling, some people say it's a business, or some people say it's a job. I was talking to someone the other day, and someone said, "Oh, trading's not a real job," and it's not a real job. We don't want real jobs. That's the whole point of this thing, is to avoid having to get real jobs, right? So trading and poker are both professional gambling. This is how poker works. In poker, you have hands like ace, ace, king, king, queen, queen, king, queen, jack, jack. Maybe you have jack, queen, king, ace, so on and so forth, right? So I don't know how many of you guys played poker, but here, I'll just explain something to you. There we go. So we have some hands on the screen. Ace, ace, king, king, queen, queen, king, queen, jack, 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 queen, king, ace. In poker, I don't know if all of you guys play poker, some of you play poker. I'll just quickly explain to you what happens. Each person gets dealt 2 cards, and then the action goes around the table and each person gets a chance to bet. So you're not in control of the hands you get dealt. The hands get dealt to you. You have to make the best of the hands. What you are in control of is whether you stay in the hand or you get out of the hand. So whether you play the hand or whether you fold. And the other thing you're in control of is how big your bet sizes are. So in trading, you also control whether you're in the trade or out of the trade, and you also control how much of your bankroll you're willing to bet on each trade. So in poker, these hands right here, ace, ace, king, king, queen, queen, king, queen, jack, 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 queen, king, ace, these ones have a positive expected value. So what positive expected value means, more often than not, these hands are going to make you money. You don't know on the next poker hand if they're going to make you money. You might have pocket aces in the next hand, they lose. That's fine. You just keep playing because you know over time, if you keep playing and you keep managing your money right, pocket aces is going to make you money. King king is going to make you money. You don't know if it's going to make you money on the next hand. You don't know if your system's going to make you money on the next trade, but you know if you keep stick into that A plus setup, that setup with positive expected value, you're going to make money in the long run. So that's the name of the game. And in poker, when you start out, you only want to play these best hands. You only want to play these best hands when you start in poker. But people start in poker and they think, oh, I can play whatever hand I want. Oh, I can play this. I can play that. No, you can't. You're not Phil Ivey. You're not Daniel Negreanu. You can't play those good hands. You have to narrow your range, bro. Narrow it right down. You need to play just the best hands and you need to capitalize on those. So it's the same with trading. Everyone just needs to narrow their range. They need to narrow their range to those screenshots they have, those setups they have, those hands that they play that give them a positive expected value, and not put so much pressure on it working out next time. We don't know if the next trade's going to work or not. We don't know. That's the truth. Anyone that tells you they know, they're lying. You just have to keep showing up and you just have to keep playing that same hand over and over, and things are going to work out for you. The other part of poker is, think of this scenario. Say you have two poker players. You have, let's go like this. Say we have pro. Say we have two poker players here. We have a pro and an amateur. A professional poker player can show up to the game and he can lose and fold and lose and fold and lose and fold. He can fold and lose for hours. Hours. And then he can win one big hand and go home that night a winner. An amateur can show up to a game, get lucky, and he can win hand after hand after hand after hand. The amateur is lucky tonight. He's winning, he's winning, he's winning. Then he loses it all in one hand and goes home a loser. So that's the main difference between a pro and an amateur. A pro manages his money so good that he can have losses all night, win one big hand or two big hands and go home a winner. And the amateur can get lucky and win, 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 but he's so shitty with his money management, he'll still go home a loser. And that's our main job in trading, is we're money managers. You're managing a prop account or you're managing a personal account. You have to start thinking in a different way. It can't just be, oh, I feel like increasing my position size now. Oh, I think this one's going to work, so I'm going to add more money. You can't do that. One day when you get super good and you have consistent results for a few years, hey, you can start doing some things. But then you're a pro. Right now, if you're not a pro, you need to just stick to the plan and you need to be risking an allotted amount so that you can stay alive through the swings that are inevitable. Losses are inevitable, and sometimes you don't know how often they're going to happen. Sometimes you can get a string of losses, 4, 5, 6 in a row. You need to stay alive through that. And a lot of the people that message me, they're not giving themselves a chance to stay alive through that. They're risking too much, and then all of a sudden their account's blown and they're surprised. And it's like, your account's blown because your trades were so big you could only take 5 losses before the account was blown. How are you going to ride that out? Sometimes poker players, they'll have a whole losing month, but at the end of the year they'll leave with $1 million. So they need to have a bankroll big enough to sustain the swings that are going to come with poker. So it's the exact same. I think a lot of you guys have a lot more potential and a lot more, you're a lot closer than you realize. But sometimes you think that you're so far away, and if you keep fucking around and not following the steps that you know you need to follow in the order you need to follow, you are far away. But you've had a successful trade. You've had 2 successful trades, 5 successful trades, 100 successful trades when you followed the system. So if you start following the system perfectly, you put the right steps in the right order, you're going to start seriously making money. Just stop thinking about making decisions you feel like making and start thinking of how you're a money manager managing money, and you have to follow a business and follow all the steps regardless of whether you feel like it or not. So let's open the chat here. Does anyone have anything to add, or you want to ask any questions about anything? I think in a minute we'll just switch over to Smash. Yeah, and Dr. Patient says, if this, then that. So that's the main sentence that I always like to use. Your business is just a game of if this, then that. So let's go if this, then that. And you could do these one, right? So this is how you run a business. If this, then that. If a customer comes in, then I'll do that. If this, then that. If this, then that. If I'm out of inventory, then I'll order some. If the market does this, then I'll do that. If the market goes here, then I'll do that. If it's news, then I'll do this. If it's a Monday, then I'll do that. If the trade is halfway to take profit, then I will maybe it's close some partials, right? So that's the way I like to think of all this is I have the steps and I have the system that I use, but then I like to play it as a game of if this then that, because you're going to run into all sorts of scenarios and all sorts of things that pop up, and if you're not prepared for those scenarios, you're going to be in trouble. I'm just going to read the chat here. Will anyone go over risk management for everyone? Just to refresh for some people. Yeah, I think yeah, Smash is going to go over risk management. He's going to go over some stuff with the strat. And so yeah, that's basically why I wanted to do this today, because I would just do it as a lead up to what Smash is going to talk about. But you can even see here, I have the word poker at the top still. If this, then that. So in poker, if I get this hand, then I'll do this. If the bet size is this, then I'll do that. If my opponent bets this, then I'll do that. It always has to be that scenario. So with trading, you find that there's a lot of strategies that are a lot of situations that pop up. And so last week I talked about uh, basically like being very aware of how you think you're going to think when scenarios pop up. So people think, oh, when I get in this scenario, I'm going to handle it properly. And when you get in that scenario in trading, you're probably going to be emotional and you won't necessarily handle it properly. So make sure you have a plan to deal with that situation. If you're in a buy, then make sure you know, okay, this is what I'm going to do if we get a bunch of big red candles and we're pulling back. So I think Smash probably has his screen open now. Let's switch over to that. Smash, my boy.
What's up, my brother?
Yo, yo,
Thank you for that
yo.
intro, bro.
Yeah,
Not gonna
thank
lie,
you.
that was a beautiful intro. Um, but it's true. It's actually very true. I think for most of us, we all come to the markets with a plan,
Mhm.
and then we fail to execute the plan,
That's
and
right.
then we left with our fucking heads in our hands, and we're
Yeah.
wondering why we aren't profitable on the day.
There's poop in my
Especially
hand.
because, yeah, exactly, literally, poop in the hand. It's like Jared, you know, taking taking a fat shit in the hand before the actual, you know,
Mhm.
before the actual
Mhm.
session starts. So, look, I mean, I mean, I've also made this mistake countless of times in the
Mhm.
past before. I still sometimes make it because it is unfortunately at times we are in an impulsive market, right? So you don't really know how the actual setup's going to play out unless you have the patience to wait for it to play out.
Mhm.
Now, like a typical example of that was this week. I mean, on Monday and Tuesday, because we were at all-time highs, we didn't have enough data to provide us with the the lead setup, which was ultimately going to be bearish.
Mhm.
I was basically forcing the setup to happen.
Mhm.
But obviously, you know, from a professional stance, you're gonna take your losses. But then after you've taken your losses, you step away. Like we took two losses on the day, we stepped away. Then the
Mhm.
next day, we took one loss, we stepped away. Then a few days after that, we scored a 200 pip move. Then we did 150 pip, and then on Friday we did 845 pips. You
Mhm.
know, so it's because of the fact that you have to give the market time to also deliver enough data for you to be
Mhm.
able to say, okay, this is the overall direction that the market's going to take, or
Mhm. Mhm.
to sort of validate your setup, you
Mhm.
know, for future reference. So it's very true, bro. Like you have to have a plan. If you don't have a plan, you're gonna constantly make the same mistake. You're gonna be constantly sitting in doubt. You're gonna be at a point in your life where you just want to give up, throw the shit away, and all of that other stuff that you've been through in terms of losses, in terms of disappointment, in terms of everything in general, is just gonna all be for nothing.
Hmm.
So in order to alleviate that, we have the strategy. The strategy is primarily for entry, but there's some of the things that I haven't gone over with everybody, and that's what I look for specifically, and how I apply the strategy in real time. Okay, because that's very difficult to do, especially for people who don't really have a lot of market experience and chart time. Chart time is extremely important. That's how you know whether or not to be patient in the markets, whether you should impulse, or whether you should just leave the markets alone. Because there are times where it's okay to leave the markets alone. You know what I'm saying? Because your bias could be wrong, you know? And it's unfortunate, but that's how the market is. Like, it's not
Hmm.
always going to work in your favor. So these are the things that I'm obviously going to go over today. Risk management. I mean, I think Dr. Scottish basically insinuated on risk management a lot in what he was saying. That's where majority of everybody goes wrong.
Hmm.
It's this ultimately is a marathon, guys. It's not a sprint. And if any of you are trying to get rich today or tomorrow, and you've never dealt with that kind of money in your life before, I promise you, you're gonna turn that amount of money that you make, even if it was by luck, in a matter of weeks to months, you're probably gonna go back down to zero because you don't know how to manage that amount of capital.
The old
So
flipping it to zero.
yeah, you flip it to zero, yeah, 100%. So look, I mean, as much as yes, the strategy is important, there are other factors, and that's what Dr. Scott is just trying to say. The plan is most important. You have to follow a process. If there's no process involved in your actual setup on the day that you're trading, then it's a no-go. You
Hmm.
understand? Okay, guys. So look, let me go over some of the trades that we've done within this month. We've had some really, really good trades. There's actually a trade that I wish we all sort of full ported because if we did, we would be fucking really up right now. And I'm gonna show you where it all started, and you guys are probably gonna just be like mind boggled, But I mean, this is what we're here for. We basically are here to learn from past errors and to not make the same mistake in future again. Like if there's an opportunity to hold a trade, we can hold the trade. If there's an opportunity to exit early, we should exit early. If there's an opportunity where even the opportunity in itself doesn't play out in your favor and you take a break even, don't be a dumbass and fucking move your stop loss because that's just going to be stupid, you know? So, but I'm going to go over things now and make it a lot more simpler for you to understand. But I'm going to start off with the first signal that sort of got us our first big win. I think that was in the first week, if I'm not mistaken. Hey, Dr. Scottish? No, actually, second week. It was No, it was NFP week, actually.
Hmm.
I think, if I'm not mistaken. No, it wasn't NFP, it was CPI. It
Yeah, it
was
was
actually
news something. Hmm.
yeah, it was actually this bit of drawdown here, right? So one thing I want you to understand, when the market breaches or breaks structure to the upside, right? It always pulls back. Okay. What does it pull back to? It pulls back to liquidity. Okay. So I'll give you the break of structure point here for this particular setup. Okay. So this was our area where we needed to see the market break because for a period of days, it basically held as a very strong area of resistance, right? Price needed to ultimately breach this particular area in order for us to have the overall confluence that market was going to continue bullish, right? We know that on a higher time frame, if you look at the overall higher time frame scope of this particular asset, you can see that the market is currently bullish, right? Higher time frame um, trend always trumps lower time frame structures or internal trends. Okay, so when you see a trend like this forming on a high time frame, ultimately you're waiting for price to pull back, sweep liquidity, and then basically give you an opportunity for you to re-enter long because the overall trend is basically bullish. Now, a lot of you know that, some of you don't, right? But for the people that don't, and for the people that do know, right? Whenever there's a break of structure that's basically favoring the overall higher time frame trend, don't enter at the break of structure. As you can see, market did break structure. Okay, there was an internal change of character. Okay, this was internal. We had one, two, three, four, five pullbacks before the price actually broke structure to the upside. Now, there's a difference between change of character and break of structure, right? An internal break of change of character could be something like this, right? You see that the market initially was trending bearish.
Yo, yo.
And what did we do? Internally, in this internal trend, right? How we spot a change of character. This is now, I'm talking now from a professional standpoint, right? Because a lot of people don't know that this is how you actually spot a change of character. Changes of character can be indicated from when a previous lower high was basically broken and respected above, okay? Or alternatively, the professional way of actually noticing a change of character is when you see a bearish fair value gap get inversed, right? And then price breaks and closes above the inversed fair value gap. That's when you know that this is a confirmed change of character. And this is ultimately your break of structure. Okay. So your change of character is here. Your break of structure is here, right? How we know this is a break of structure? Price broke structure here at this wick. And immediately as it broke structure, it pulled back. What did it pull back into? Liquidity. Now, liquidity can be housed in the form of an order block, a fair value gap, or just a previous higher low, for example, internally. So I'll show you on a 5-minute time frame at that particular level. Okay, my chart decided to disappear completely. Okay, so internally, we have the break of structure here. Let me just mark it for everybody to see clearly. Just delete this shit quick. Okay, so this is your break of structure, right? Okay, internally, what do we have on the lower time frame? We have a fair value gap that's in alignment with a higher time frame fair value gap. So if you want additional confluence, when your hourly time frame creates a fair value gap and breaches the break of structure, as soon as the breach happens, you drop down from a time frame alignment, you drop down from the hourly to the 5-minute. And on the 5-minute, there should be a fair value gap at that particular level. If there's no fair value gap, you can drop time frames to look for a fair value gap that aligns with the high time frame fair value gap that basically is being respected. You see how clean price comes back to this level, taps into fair value, and there should be lows on lower time frames that's housed at this particular level. I'll mark this low specifically because that's where price swept, okay? And you'll see that if I drop to that particular level, I don't know why my chart's fucking doing this. I have to search for that level. You'll see that on the 2-minute time or 3-minute time frame, there's that fair value gap, and this is the low that price breached. Okay, this move here is an inducement, right? This is inducing sellers. It's also giving false bearish pressure as well, basically indicating that price wants to drop lower. But what does price come and do? It creates a protected low. This is a protected low, meaning that if we do get a pullback, if this pullback breaches this low and then trends higher, then this pullback's low is basically the protected low. A protected low, if it's broken below and respected below, for example, let's say price were to do this in this case. Let's say price was to break and close below that particular low, then that would invalidate the bullish trade from this particular level and you would continue bearish. So your entry bearish would have been there. But as you can see in this push lower, there's no fair value here. This is not a fair value gap. This is an imbalance. This impulsive push to the downside was to fetch liquidity. It wasn't to confirm bearish continuation. So because the trend overall internally, and this is where a lot of people go wrong as well, internal trends can sort of fake out a move. So if you are looking for a continuation bearish because you're assuming that because price is at all-time highs, now it's going to pull back to a much lower value, right? You're completely wrong because price is validating that it wants to continue higher. And it basically confirmed on a high time frame first, then it confirmed on a lower time frame, which gives you that additional confluence for you to enter long. So your entry would be here. Okay, where would your stops be housed? Below this particular low. Okay. Now this is where risk management comes to play, right? So this is basically about, you can call this 50 pips, right? So I'll give you an example. When I send a signal, I don't use tight stop losses when I send signals. And the reason why I do that is because some people might enter the position late. Some people might enter the trade here, for example. So if I give you a 25 pip stop, or let's say you enter here, right? You enter the buy here. If I give you a 25 pip stop, this move specifically is about 25 pips, give or take. It's about, yeah, it's less than 25. It's about, actually, it's about 40 pips. So you would have been stopped out of the trade before it actually went in your favor. Do you understand? But if you entered here and I gave you a 50 pip or 75 pip stop, you'd have still been in the trade, right? This move alone is basically 100 pips. 200 actually, right? And this is just the beginning of this entire push to the upside, right? But this is also another move that we took. We took this trade at 76. Our entry was at 76. It was around about this area here. This is where we looked for the entry. Or this is actually where we got into the trade. We got in at 76. And I think we traded up to, hold on, let me just check here quickly. I'll tell you where the take profit is now. Give me 1 second. $76. Our take profit was 2,900. 2,900. Yeah, that's TP. So even though we entered the move late, right? Again, another confirmation, break of structure, waited on the pullback, price pullback. Dr. Scottage unfortunately missed this move. He went BE too soon, right? Our entry was at 76, yeah, okay, and we had a 50 pip stop loss. Zero drawdown after that. Price never came back to entry. Okay, that's just one example, right? This is not even the biggest move we've taken, right? This is just one of them, okay? But yeah, okay. So basically, break of structure, pull back into liquidity. Look again, price pulls back into liquidity, right? Pulls back, creates a low, and then we create a protected low. So this protected low could have been your entry as well, because as soon as you see this wick, for example, you know that's confirmation that price wants to trend higher. So where you have confirmation to enter long is once price breached this low. I'll show you divergence on the lower time frame. Let me just add the indicator quickly. I added 3. We don't need 3, guys. We just need 1. On the lower time frame, at this particular level, well, now I have to drop to 1 minute time frame, but you probably on the 1 minute time frame at that level, you will see the entry. I don't know if you're going to be able to go that far. No, I don't think it's going to allow for us to go that far. Yeah, it's not. Okay, but anyway, at that level, I noticed the divergence, and that's why we held the position at that level specifically. And yeah, basically we were able to capitalize on about a 200 pip move, about 140 pips, give or take. That was still a good move. But ultimately, this is the position that I actually want to go over, right? So what you're looking for when you when a session starts, right? Especially on high impact news days, right? You want to mark off your target range, okay? So because we are trading in consolidation at this particular level, right? You're going to mark off the high of the range, okay, and the low of the range. This is actually not the actual move. Oh yeah, it actually did start here. 2905 was actually the entry, so it was here where we found this entry. But I'll show you internally at this particular level, right? But anyway, price basically breaches this low. Okay, we create a break of structure here. We don't pull back. The reason why we don't pull back is because we have a higher price delivery target. Okay, once we breach this level, this is confirmation that price is not going to pull back internally, right? Maybe on a much lower time frame. This is on a 4-hour time frame. On a much lower time frame, you'd probably get the pullback internally at that level. Let's go 15-minute time frame at that level specifically. Here's your break of structure. Price pulls back into liquidity. Here's your fair value gap. That's your entry to go long. 50 pip stop loss or whatever you're comfortable with risking at that particular level. Right? This was actually a 20 pip stop, by the way. Okay, but our entry was actually at this level. So let me just discuss this level with you guys instead of just talking about other shit. Right, so target range. This was the range before CPI. Okay, now we have a bit of volume imbalance, right? All of these pushes higher, right, came off of this imbalance. This is not a valid fair value gap, because if it was valid, right, price would have moved exactly like how it played out after it tapped into this imbalance, right? Your deeper point of sell side liquidity or buy side liquidity, sell side liquidity is basically sitting at this level. Okay. Once CPI came out, the data came out in favor of gold, right? You can see that price initially pushes higher, right? But because this was our break of structure, right? We didn't have a valid pushback into any form of fair value in this particular bullish price league, right? This again is not a valid fair value gap, because if it was, price would have immediately trended higher. The market was in a balanced state. This consolidation means that market is balanced. There's no agreement yet between buyers and sellers, right? We're waiting for either buy side or sell side or buy side liquidity to get respected, right? In this case, we have a pullback to sweep sell side, and price taps into a valid fair value gap, right? I'll mark the range off for you. Okay. When I call this trade, I took the trade at 2906. My entry was at 2906.86. My stops was just beneath that low. The reason why I put it beneath this low is because it swept these lows, it tapped into imbalance, and it created a protected low. It was never going to come back to my entry, right? When I called it out in the Discord, I called this position out in the Telegram, I called this position out at 2910. Why did I call it out at 2910? Because I waited internally for a pullback once I seen the change of character. Okay, market is in a trend, as you can see here. We're trending bearish internally. On the 1 minute time frame, you'll see this trend a lot more clearly, right? We have a change of character to the upside here. This is our break of structure, change of character, whatever you want to view it as. I say this is a change of character. This is the break of structure, right? Anyway, after we have the change of character, again, we have a pullback, but this is into a 1 minute 1 minute fair value gap, right? And this is where everybody else caught their entries, right? Again, with the 50 pip stop loss, because I wasn't sure if we were going to come a bit deeper into this level. I knew we weren't coming back to this level because we failed to create a new low here. Okay. Price pulled back into fair value, right? Everybody's entries here with a 50 pip stop. Nobody ever saw drawdown at that particular level, right? And our position, we held it to 29.50. Some of us held to 29.50. Obviously, people who were more confident in the setup, like I was, held to 29.50. Okay, that in itself is a 400 pip move, 440 pips. Now that's one big trade, right? But what did
Can
we
I get a
wait
sheesh in the chat? Can I get a sheesh?
for? What did we wait for here? We waited for price to come out of this targeted range, right? We did try or attempt to take trades in this range because we knew we were in a range. We did take trades, right? But it wasn't necessarily a major necessity for us to have to take trades from this level. We waited for CPI, which is a catalyst, right? You're waiting for that news data to give you a bit more insight. If price were to break out of this consolidation during CPI, it would have already validated the setup. All we needed to do was wait for price to break and retest, right? We needed price to basically break above this level, come back and retest above, okay? And then continue. Then we could have found entry here at this particular level, right? But instead of doing that, we waited for CPI data release. We waited for price to pull back, sweep buy side liquidity, confirm, sell side liquidity, and then basically target the next point of buy side. On the 30-minute time frame, buy side was sitting at these levels. So 29.53, this was the main level that we're looking at, or that I was looking at specifically. Right now, the shitty thing is, after we took this trade, Dr. Scottish asked me, bro, would you take a trade off of this imbalance? And I said no. I said because this sometimes isn't a valid imbalance. It's an imbalance rather than a fair value gap. Sometimes prices can come down and fill these levels completely. So and it could run into these levels and maybe sweep those sell side the buy side liquidity or sell side liquidity at this particular level, right? And then go up. So I actually waited for that, right? And instead of trading gold in this week, I ended up trading Nasdaq. I'll show you another big trade that I took on Nas, right? I took trades on Nas instead of finding the pullback here. If I had seen the continuation here, I would have told everybody to hold their trades and they would have caught the 1,000 pip move on this entry. But unfortunately, you know how the markets work. It's not always going to be that way. Okay. So that was just one entry, right? But the processes that I had followed was waiting for the break of structure, waiting for the pullback, waiting for a valid level of liquidity to get swept. You know how we always talk about intermediary highs and lows? Your intermediary highs and lows, in other terms, is buy side liquidity, sell side liquidity. You're waiting for one of those to get tapped into, and there needs to be an overlapping fair value gap housed within those levels. So if there's for example, buy side liquidity, in that buy side or just above that buy side liquidity, there needs to be a valid point of fair value, right? Price needs to exhaust into that level. Now, what do I mean by exhaustion? I mean that price needs to show divergence into that overlapping fair value gap to confirm whether there's going to be a pullback or not. Do you understand? Or a trend reversal. In this case, this is a trend reversal strat, right? It's a trend reversal entry. Okay, what I mean by trend reversal, price went from a downtrend into an uptrend. It can be a lot more cleaner than that. That's basically what price done, right? Actually, no, hold on. I'm marking this off incorrectly. That's how the actual trend looks, right? So this is basically just confirmation, right? So you could have even maybe caught a pullback in that particular level, but obviously price was intending on going to new all-time highs. I mean, the expectation for 3,000 was there. I mean, we all knew that 3,000 was inevitable. And now we're starting to see a bit more impulsive bearish pushes lower, right? So ultimately, everybody wants to know, like majority of people want to know when is price going to pull back into much lower levels, right? So my bias for this week is bearish for gold specifically, right? But before I discuss that, I just want to go over the trade that we had taken on Friday, right? Now, everybody knows that on Friday, what is Fridays usually? It's liquidation days, right? Profit taking days. We've come into an all time high, and coming into an all time high without having a valid pullback, that just simply means that eventually the market manipulators and people who are already up in profits, they want to take their bags, right? Everybody wants to close profits. It's Friday. Nobody wants to hold their bags over the weekend. So the most obvious scenario in this case is waiting for markets to show signals bearish, right? So we had on Monday and Tuesday, we had taken positions within this push up, right? So my mistake was seeing this divergence and entering here, right? There was no real confirmation. Price wasn't giving us any confirmation signs. There wasn't any fair value. On the lower time frames, there were, but price was pushing bullish into those lower fair value gaps, right? And not respecting them at all. That's already your sign to say, okay, I need to step out of the market. The other problem, the other issue that I had was that I was entering the trade before session liquidity came in. Now, as you guys know, there's 5 sessions, right? You have Tokyo, you have Sydney, you have London, you have New York, right? And then you have the PM, the late PM session, right? So, but that basically falls within Asia. But ultimately, one of those sessions can give you a 100 pip move. That's ultimately what you need to look for on a day-to-day basis. You don't need to fucking chase 300 pips. You don't need to chase 400 pips. You don't need to chase 5. You can even do 50 pips. And I'm sure some of you guys that are into legacy, you know that for a fact now. You don't have to chase 50 pips, bro. You understand? You just need 50 ticks with a good amount of risk to reward. And ultimately, whatever profits that you're looking to make on the day is easily banked in a 50 pip move, right? Again, coming back to a plan. If you have no plan, if you don't know how much money you're looking to make in a day, you're just fucking around, bro. Honestly, you literally come into the market. You're saying to yourself, okay, I'm gonna place this trade. I'm gonna make $1,000 and not be happy with $1,000. Then you're gonna place another trade. You're gonna make another $1,000. You're gonna get greedy and be like, okay, I want to make one more, 1K on the day, and then I'm done. That's not a plan. If you said to yourself prior to you opening those trades that, look, I want to make $3,000 today. How the fuck am I going to do that? X, Y, and Z. You draw out your plan for the day. If you're chasing $3,000 for the day and you have a total sum of 5 trades maximum that you need to open on the day, and you've reached your cap in 5 trades and you've only made $1,500 for the day, that's enough, bro. Walk away. You've made 1,500. You know what I'm saying? You don't need to open up more trades because then if you open up a 6th trade, that means you're not going in accordance to your plan. You understand? And that's where the problem comes into play, right? So we had taken, this is why I'm talking about all of these things. I'm trying to like sort of compare or match it with what Dr. Scottish was saying because it's valid, right? We had taken 2 losses and I said, you know what? I'm going to step away. I'm not going to look at any trades, right? I didn't even take this trade because this was actually the valid move. This was the move that we were actually looking for the day, right? But I should have waited for New York session open because if I did, that was the 200 pip move that we could have solidified. Instead of taking the trade from here, we could have taken it from here. I was chasing a 200 pip move from here, right? Oh yeah, and another thing here, Rich Boy didn't know that his account hit 3K before until I told him. But that's because he didn't have a plan for the day. You understand? And I'm sorry to bring you out in that regard, bro. But ultimately, that's how it is. You know, like you need to have a plan and a process. If you don't have a fucking plan, you're not gonna know what the fuck you're doing. You know,
Gonna
and
be
that's why
holding to stop loss.
you understand. That's it. Yeah, and sometimes it's okay to hold, right? It's okay to test the bounds of your setup. You need to also go through those experiences, right? Don't be scared to close. Like I wish Ian was in this chat. I don't see him here. But I wish he was here because he's somebody that I think he has it. Technically, he's technically sound. He knows how the market operates, but he's fearful to hold trades. You understand? And the reason why is because he's not a customer who allowed himself to chart down, right? For me specifically, this is the trade that we took on Friday, right? We had entered at 47. This is our entry here. It's literally on the week, right? I call this trade at, I'll tell you exact prices. I call this trade at 47.5. 47. Let me just change the coordinates. This is when I call this trade. Okay, maybe this chart is not showing it exactly like my MT5, but for me it was at 47.5, right? Price basically, as soon as price came into this level, what did we do? Let me break it down for you all, right? So we created exhaustion towards this level on a lower time frame. So on the 1 minute time frame, we have divergence, right? Let's go 3 minute time frame. I'll show you fair value at this level. This is our intermediary high here. This is our fair value gap here. See, on another chart, you'd probably see price tap into that level, right? But we have this protected high, sweeping this liquidity at this particular level, then dumping from this level. Also, another thing that you also need to take into consideration is that this is basically a fresh supply zone. Market has never tapped into this level aside from this push up, right? Also, the push up showed that there was very little to no volume from a bullish perspective, right? Yes, there were impulsing moves, right, to indicate that price wanted to push higher, but these were all inducements higher, right? Even this was basically just to fetch liquidity. Like London basically pushed price higher, right? New York also pushed price into this level, and then when Asia came in, Asia decided to start dumping, right? Once we swept London highs, price immediately started tanking. Everybody's entries were from between 47 to 46. This is where everybody's entries were sitting.
And
Right?
once we inverted that fair value gap there, it was on.
It was on already, yeah. So we already
Yeah.
knew that price was basically going to confirm. So again, yeah, once like another thing that I indicated earlier, change of character as well to the downside, right? And then inversion fair value gap aligned with a bullish fair value gap here at this level. And what did price do? Broke and closed below this bullish fair value gap, indicating that we wanted to continue lower. So on this particular session, we had 3020 was our targets. Some people closed out here. I held my trades because I wanted 3,000 for the day. Entry with stops. Some people held till there, right? And then I asked everybody in New York session if they wanted another entry. Everybody said yes. Again, same principle. We have an intermediary high here. As price taps into the level, starts exhausting, giving you divergence. I actually wanted price to come deeper into the level of fair value because I wanted everyone to have a much cleaner risk to reward ratio. Okay, unfortunately, it didn't come all the way in. It basically just gave divergence into the level, swept intermediary highs, took out all of this liquidity, everything that's housed in here, right? As soon as we had the break of structure, this is again having a false break of structure to the upside, right? We know that this is not a valid break of structure. Why do we know that? Because price is still resuming the overall downtrend, right? We've created an inversion fair value gap. It's a fresh fair value gap. Price has never come into this level before. Because it's coming into the level and respecting the level, as you can see here, this is an indication to go short. So my second entry was at 45. I entered here because I had to impulse it. My initial entry was at 37.05. I entered, actually, no, hold on. 37.05, yeah, was my second entry. So somewhere down here. But I had moved to break even too quickly. I told everybody to move their stops to 47 because I wasn't sure if we are going to come a bit deeper into this level. But I moved 47, but ultimately you could have had a much tighter stop loss, as you can see. Zero drawdown on this trade as well, very little drawdown. And then our targets ultimately for this particular trade was 3,000. So again, look, price was trending in an uptrend here. Okay, we broke and closed below the uptrend, continued to respect below this particular trend, and then we started a new trend, bearish. So this is basically now giving us another indication that we could possibly continue the bearish theme next week. So all we're waiting for now is price to come into valid areas of fair value, right? So I'm waiting for price now to come back deeper into this point of supply. This is our supply zone over here. And I'm looking for an entry. You can see already on the lower time frames, you're starting to exhaust. Here's our divergence already. Starting to exhaust towards this level. I'm waiting for Asia to maybe impulse the bullish pressure into this level to activate their orders. Once the orders are activated, we're probably going to look for sells in this level, back down to 3,000 to take out this liquidity. For next week, I'm looking at the fair value gap, daily time frame. I'm looking at 267, this level, to be taken off. So I'm waiting for this fair value gap to get tapped into, then we can start looking for longs again. Yeah, until we have confirmation that price wants to start a bearish trend. So for now, basically, all I'm waiting for is just pullbacks into levels so that I can buy again. This imbalance is starting to get filled. You can see that we have broken structure to the downside. Yeah, let me just show you that again quickly so you understand. If you're looking for the bearish scenario, this is your break of structure. Let me inverse the chart quickly. Break of structure, pull back into liquidity. If this level holds, you're going to look to go short. Where are you targeting? Valid points of liquidity. Fair value is housed in this level here. Okay, your stops pull below this level, and you'd be targeting fair value in this level. And that is about, if I'm not mistaken, another 400 pips. 500. And I'm definitely looking to secure everybody that this week. So another 500 pip move, yeah. What do you think about swing trade this week on gold sell limit at 3037 at buy side liquidity? You know, yeah, bro, basically, bro. That's basically what I just said now. Man. That's what I'm looking for. Trend bearish. Ultimately, we're looking at a bearish trend here. So we want to look to go short. We have an untapped supply zone, right? We want price to fully exhaust into that level to respect beneath it. This is a break. This is the retest. We want price to do this, give divergence, and then continue bearish theme. Right? Our stops don't need to be this high, but ultimately, once price starts moving away from our area of interest, then we can start making the reductions, going to break even, whatever the case may be. Yeah, and yeah, Dr. Patience, I mean, if you have trouble with understanding how to look for bearish scenarios in a market, because it's always easier to find a bullish trade, right? But we've had this impulse from the downside, right? We've had this impulse from this level, but we haven't fully tapped into fair value, right? We haven't fully rebalanced price. This imbalance needs to get rebalanced, right? It's a gap in the market. So price, it will treat it as a magnet. So it will basically come back to this level. You see, on the 4-hour time frame, we've just basically tapped into oversold. This is the first leg of divergence. So once you have more chart time, you'd know that you don't enter long off of the first leg into the divergence, right? You want price to drop one more time and take out this liquidity and then tap into fair value, right? What does that give you then? It gives you a high time frame divergence. Okay, once it gives you that high time frame divergence, then you can look at going long and probably targeting an internal fair value gap or an intermediary high or new all-time highs for that matter. Do you understand? So this push up can also just be an inducement. Another thing that I also want to say is, right, majority of the time when you have a break of structure to the upside, when price breaks structure, right? The impulsive move that created the break of structure, the level where the break of structure had started or was initiated from, is always the deepest point of liquidity that price wants to come back to, right? So in this case here, we don't really have much data to solidify the fact that we would get a bounce off of this level. If anything, price could even come back down to this level and completely inverse this level, break below, and then start a new higher time frame downtrend, which is basically valid. It's something that needs to happen, right? Because this move hasn't been corrected since December 2020. You understand? From 2020, let's go back to the origination of where this move originated from, right? 2020, right? It started off from here, December 2020. Actually, it was here, around about this area, that we had this push up, right? So we haven't rebalanced everything. There's a whole area of untraded chart that price now needs to rebalance. Okay, just like our Bitcoin fell, just like our Nasdaq fell. I feel like this is the time now where gold makes a healthy correction in the markets. And if that's the case, if we inverse this particular fair value gap, that's a high time frame change of character, which means that we're not just going to stop at this level and then push up. We probably come very deep into this price level. And I'd say this level here, because this started the overall break of structure, I'd say this level would be a target for this particular um, trend to fully exhaust, basically. But yeah, obviously, it's not a very simple thing to understand. It does take time for you to start realizing that every time the price breaks structure to the upside, it pulls back. But if you have any questions, guys, please feel free to ask now.
Could
Before I
you
continue.
maybe type out like a 4-step or something for them to look for so people can like screenshot it or save it? Like do this,
Yeah,
this, this, then this.
yeah, 100%. Now, what I'll do is, so guys, I'm sure you guys have noticed we've changed a lot of things around in the actual Discord itself. We've now got basically combined all the educational modules. We put everything under education. What I'll do is I will also add an infographic for this concept, right? And then I will add under the TLA strategy, right? I'll add the new confluences that you need to look for when you're looking for the break of structure. Walker Boy has actually been testing this, and I'm sure he can also vouch for the fact that this strategy is completely valid. It's on every single asset. You can look at US30. Let me show you. Let me show you Nasdaq, for example. I'll show you Nasdaq on a high time frame. Let's just look at the hourly.
Nasdaq, smash the smoking on a gas pack.
Yeah, bro.
Whoa!
Okay.
Bro, the way Nas has been moving today, though.
Yeah.
Shit!
So yeah. So let me show you
What?
the
Sorry,
point
sorry,
of where
sorry.
this
I gotta
is.
check.
Yeah.
Scotty, I'm gonna start charging you for using these, you know, bro.
That was me.
Yeah, bro. Okay. So let's look at the uptrend, right? And how the uptrend started. Okay. So here I'll look at this level specifically. So we have a break of structure to the upside, right? What does price do? As soon as it breaks, you don't enter here. If you enter here expecting for price to create new all-time highs, you're just fucking yourself over because you're not waiting for a valid pullback, right? You see, here's the pullback. This is your pullback. What does price pull back into? It pulls back into liquidity. This is your fair value, right? This is the main point of fair value here that price taps into. Okay, as soon as it taps into this level, it creates a protected low. Once the protected low is created, this is confirmation that price does not want to trend lower. Okay, it basically respects above this level. Okay, it fails to create a new low, it creates a new higher low, right? And then as soon as it creates a new high low, what does it do? It breaks and respects above this particular fair value gap. This is your entry. Stops below this low, targeting all-time highs or even this intermediary high. This move alone, that's 1,000 pips, I think. This is on US30, sorry. But Nasdaq, same shit. Looks the same. Very same shit. Let me show you in the downtrend. I'm going to inverse the chart so you can see. Price was in a downtrend here. Internally, we have a change of character. Here's our change of character here. Okay, I'm going to go up to a daily time frame. We have a daily fair value gap that gets inversed by a bearish fair value gap on the daily time frame. I entered here. I'm sure some of you guys have seen that video where I took that NAS trade.
Smash.
I entered here. Yeah. What's up, bro?
Sorry, bro. You know, because that bearish fair value gap, yeah, got ran through again, yeah. Does that mean that that's a balanced price range? Why price hasn't come back to it?
Yeah, 100%. Actually, not. It's an imbalance. Price will or should come back to this level, right?
No,
Remember
I
with
mean,
the-
oh, okay, got ya.
Yeah, it is a
Yeah.
BPR though. Price just shouldn't
Yeah,
break
it
that
is.
level. It should hold.
It should. Yeah, 100%. As soon as it broke, it respected below. Remember, this is a daily time frame, bro. If I go
Yeah.
over to the 1 hour time frame, you'll see the respect of this level. See, there's the respect.
Yeah,
You see, as soon as it broke, it respected, right?
yeah,
So this basically is rebalancing price that this push up, right?
yeah,
As you can see on the lower time frames, even though we have a daily fair value gap on the lower time frames, the markets was in a balanced state. You understand?
yeah.
So there's no fair value here, right? So what is price then targeting? Price is targeting levels where there is fair value sitting. There is fair value house. There's no fair value here. Look here. There's nothing here. Everything is balanced. You see what I'm saying? So where's the next point of fair value? If you look here to the left here, this is an untapped level of fair value. Okay. You see that as soon as price comes into this level, you have much of an impulsive push outside of it. Right? This move alone from here to here is like 600 pips. You understand? So you get a much more impulsive push out of this level from here to here. But ultimately, once price inverse this level, your entry could have been on this retest. Right? I actually entered here. My entry, I swear to God, I'll send you guys that video. My entry was here. And I exited this trade here.
Oh, that was the one you sent me, eh?
I think I sent you that.
Yeah. I think you were even a little bit higher on the entry.
Yeah,
It was
I saw
like
that
it was right at the
Yeah.
tip.
No. But the entry that I sent you recently was a recent one, bro. That was here. It was here internally.
Oh yeah.
Yeah. But this is another entry that I sent. But yeah. Yeah. So basically, price creates an inverse fair value gap. Like Rudy saying, it does create a balanced price range. Price does come back into this level. It doesn't need to rebalance this price, right? Because the whole idea is that the price delivery target, the change of character has now changed to bearish, right? So now we're looking for lower prices to basically rebalance. Okay. These are areas that you are focusing on. You're looking for areas of fair value that has not been tapped into before. There's no fair value here. There's no fair value here. There's fair value here. And there's fair value here, right? You see, I'm going to basically drag this whole area across. You see how price respects this level.
And so you
So
guys
now
got to be
you have that
watching.
impulse push.
You got to be watching these higher time frames. Some people are just staying on the 5 minute, the 15 minute. This is why you're messing around, because you're not seeing the actual areas.
Yeah. So you on your higher time frames, the whole idea of the strategy, right? Is on your higher time frames, you're waiting for price. If you are a swing trader, right? And if you are looking to buy, this is a swing trade now from this level, right? I would buy already once I've got additional confirmation. Now this candlestick for me looks like additional confirmation now that price wants to continue bullish, right? We don't have fair value. We've already fully mitigated fair value here. We don't have fair value here, right? The only imbalance that we have is on the high time frame here, right? So if we have divergence, which we don't currently have at this level, as you can see here, we have actually divergence here. Sorry, just hold on 1 second. Just drag this shit up quick. So you got divergence here at this level. Okay. This needs to be validated as a protected low. Okay. If it's not taken from, I mean, if it's not validated as a protected low, what could happen is price could breach, right, and then align with this daily time frame to give a daily divergence. Okay, that's then additionally giving you a much higher confluence that price wants to continue bullish from this particular level. You see, we've just barely tapped into this level. Okay, we've swept a lot of liquidity, so a pullback is necessary, right? Where are we pulling back into? We're probably pulling back into the supply zone, right? This is now to validate the bearish trend. This was in an impulsive push lower. This is a profit take. Asia was selling the fuck out of this. This is because of trade wars. This is because of Trump, tariffs. This is what causes the type of moves in the markets. This is not a real move. You understand? Sometimes this can just be an inducement. So every time it comes into a bearish fair value gap, somebody else is going to be selling. And you'll notice that when people have that belief that that's what's going to happen, price will give you the push, but then it will continue bullish until it basically fully mitigates whatever it's created at this particular level. Then if the trend wants to change bearish, if it fails to breach this high, right, it will continue lower. So these are things that it's very difficult to explain to somebody who doesn't have chart time. You need to have the chart time, right? But it's easy to see. Like right now, I mean, you can see, right? We don't have, I mean, when we tapped into this level, right? This on a daily time frame was already a mitigated fair value gap, right? Price tapped into the order block here. Okay. And then we had a 600 per push off this level. Okay. We could not hold fair value in favor of the bulls above this fair value gap here. If I drag this to the left, a previous support has now turned resistance at this particular level. Okay, this means that this is this is an intermediary high here that's sitting at this level. Okay, if we get a break and closure above this level, then price is going to sweep this intermediary high and then should exhaust into fair value here to then push lower. That then starts the new bearish trend for NASDAQ. Do you understand? Also, let me just highlight this for you guys quickly. I don't know if you guys can remember my screenshot that I sent out. Go and look at the general chat. I call this level. I even said in case price falsifies a break of structure for continuation bearish, this could be a nice level to buy off of. Price comes back into this level and we have a push outside of this level. So main factors or main takeaways that you guys need to understand, right? You need to understand market structure, right? You need to understand institutional order flow. And you also need to understand internal and external liquidity. If you don't understand any of that shit, you're never going to make it in trading. I promise you, you will never make it, right? A lot of what Drew's actually in the chat. What Drew posts, he only trades liquidity. He doesn't trade anything else. He only trades from one point of internal or external liquidity to one point of internal and external liquidity. That's all it is. And you'll find that sometimes fair value gaps and all that other shit that we taught, it doesn't really play very well, especially if you don't understand that are mitigated fair value gap already. Because it's mitigated, price has a high probability of trading through it. If you don't understand that, right, you're probably going to be buying off this level, just like all the other retail traders that bought off this level. And then what you're missing out on is the major move, which in this case ultimately was the bullish move. You'll notice if I push back, if I go back a replay, right? You see that this was the first leg into the RSI oversold. So you don't buy into the first leg, you buy off the second leg, because the first push higher was the inducement. This is what I've been teaching you guys, right? So because we've come into this level and we've now tapped into this level of fair value and we've taken all of this liquidity, right? As long as we stay above this particular level, and if we close above this level, this confirms now that the internal change of character has happened and price is now pushing towards a untapped bearish supply zone, or it wants to mitigate all of this momentum or this move that price created lower. Okay, but yeah, I mean, let's go through some questions, guys. Anybody got any questions, anything to that effect? Yeah, Drew, bro, we got new tags, brother. We made some changes, man, just to, you know, sort of make everything more streamlined. Want to post some new content like infographics and stuff, things that get missed or lost out in the general chat. Yeah, bro, we want to make some changes, man. We want to get people on the ball. 2025, we said we're gonna make the shit a movie. So we're gonna make the shit a movie, bro. For real, for real.
2025 popping bottles.
Nah, for sure, bro. No cap.
Woo!
100%. But yeah, questions, guys, please. Ask me questions. If you don't, and look again, I'm gonna say this as well, right? If you don't ask any questions, you're gonna be in the same position. You're gonna send me DMs in 2 or 3 weeks' time.
Don't be afraid to sound stupid. Don't worry, guys.
Yeah,
If you ask
bro,
a
there's no
question,
such thing.
yeah, and some people have the same question as you. So if one of you asks it, sometimes you're asking for multiple people. So just put it out there.
Yeah. So again, guys, remember, break of structure, wait for pullback into liquidity. When a pullback happens and you get confirmation, your main points of confirmation is a protected low, an inverse fair value gap that gets respected. Your entry is off the inverse fair value gap, or alternatively, off the lowest point of divergence, right? So when price creates the first leg into oversold, you're waiting for the last leg. So I'll show you an example of this, let's say on the hourly time frame. I'll show you here. Yeah, like for example, this, right? You see that price creates divergence. Okay. This was your major point of displacement, right? Price needed to displace this level. Sorry, hold on. Let me just close this RSI. Hold on. Let me just delete all this other shit, man. Fuck. Okay. So price creates divergence, right? Does initially give you a push, but it's unable to create an inversion fair value gap at this level. Okay. So probably on the 4-hour or daily time frame, there's probably a fair value gap housed at this particular level. We're unable to create an inverse fair value gap at this level. So because we don't have an inverse fair value gap, right, we do have an internal change of character, but there's no fair value housed in this particular price leg. So you know that any form of pullback into this level might most likely, if the push outside of this level happens, it's most likely an inducement. So if you look at this level, so look at the difference between here, right, and here. Look at this shit, right? Price creates like a consolidation, a range, right? Where's your range? This is the top. Why is it not pasting my shit, man? Fuck. This is the bottom, right? We've attempted multiple times to break outside of this range. This was the first attempt. Price came back, attempted to respect lower, right? We obviously had a news week. Price then breached above this level, failed to create a new high, and then we had a push lower, right? When we had that push lower, we swept an intermediary low. This is why we're having this push, right? But now we're tapping into a bearish fair value gap, right? So if we don't close or inverse this properly, like what we're doing now, we're creating inversion here. If we don't inverse and close above this particular level, like this, right, then price is going to come lower. And where's it going to target? It's probably going to target the bottom of the range again. This is the targeted range. Okay? And this ultimately then, like I said earlier, might give you that higher time frame divergence, which then sweeps all of this liquidity that's created in this price league. You understand? And then you should get a much more clearer fair value gap, right? Remember, this needs to fully exhaust to the downside, and we need to have confirmation now that price wants to trend higher, right? Even though we are still within the uptrend at the moment, right? We need two forms of confirmation. Either we need confirmation of a breaking closure above this level, or if we want to change or stick to the bearish trend overall, we want price to close and break or close below this level, respect below, so that we can continue the short. And our targeted short levels would then be these levels, right? We don't have fair value housed in this price league. So that's also giving me the indication that price could potentially come lower, right? But NAS doesn't always have to respect fair value gaps. Do you understand what I'm saying? It's swept liquidity, right? If this is enough liquidity to sustain a move to 20,000 and beyond, then price will carry this momentum through, right? But how we know that is once we have validation above and beyond this particular level. If we don't have that validation here, we can look for shorts to the downside. But that's giving you two scenarios. So you have two different ways to look at the markets. We know that we can't marry a bias, right? Because when we marry a bias, ultimately we're also bleeding ourselves into failure. So yeah, confirmation to use for protected low. Yeah, sweep of divergence, internal fair value gap. Wait for the divergence to completely exhaust. On a lower time frame, you'd see it more clearly. If let's say, for example, you have a 15-minute sweep of an intermediary low, and you have a lower time frame divergence in correspondence with that 15-minute, let's say, fair value gap or whatever the case may be, your entry would come off of that fair value gap. If you've gone over it, I missed it. Can you explain the difference between a break of structure and a change of character? I've seen the question asked before. I've been told that a BOS can be used as a continuation confluence and a change of character is a sign of reverse. 100%. That's correct. That is correct. So change of character is indicating that the market wants to change character, right? And then you're looking for your structure point, right? The main structure point that's holding the price up. So I'll rather use gold in this example because, or I could have used NAS actually. But let me use gold in this example, right? So your change of character, it happens internally, right? So look at the 5-minute time frame. Okay. Before all of this price action, price was trending bullish. Okay. How we know that? We can basically mark off from this lows to this high, right? Price was in an uptrend, right? Okay. If you're looking for an internal change of character, you could have seen the internal change of character here as well, right? But I'm now looking at the higher time frame because we want higher time frame confirmation, right? So here's your change of character here. Okay. As soon as price comes in, what does it tap into? Imbalance. As soon as it taps into imbalance, what does it do? It sweeps an intermediary high. This is where the impulse came from. It came from this level to complete the change of character to the downside. You understand? This is a swing point. This is a protected high. We're not looking at this level, right? if you entered from here, right, you looking for re-entry, you didn't get the entry here. Let's say you're looking for a re-entry in New York, right? This is your re-entry in New York. Price basically does the same shit over and over, right? There's your divergence, tapping into fair value, right? There's fair value here on the higher time frames, right? We create exhaustion, we give divergence. That's your entry, right? Same principle here as well, but I'll go through that afterwards, right? So your change of character happens here, right? And this is your break of structure point here. So this is the break of structure. And as soon as we have that BOS, I'll drag this break of structure point right across. Why do I call this a break of structure? Because in this level, we have fair value. This is the main structure point that was holding this price up. You see how it's treating it as a support? This is your floor. Okay. Now we need confirmation that price wants to treat this as the roof, right? So we're coming into liquidity, right? So all we want to happen now is we want price to fully exhaust. Once it fully exhausts, we look for sells to the downside. You understand? Yeah, weeks count as change of characters, bro. Your weeks are so important, brother. Your wicks basically do the damage. The bodies tell the story, bro. You understand? Your wicks will basically create the change of character, right? Your body will confirm it. You see? See the wick? There's your body. Now we're just waiting for closures below this level again to treat it as the ceiling. Once this is the ceiling, then we're looking to go short on this. So 3030, I don't know if you guys, goalkeeper guys, you guys remember how we were struggling at 3030? This was our level of resistance, right? So we're looking to go short once price exhausts into that level again. So 3030, we could even get respect of 50% of this fair value gap as well. Let me just use the parallel channel for this. Okay, we're at 50% at the moment. On the lower time frame, on the 1 minute time frame, we're exhausting, we're giving divergence. You can see clearly here. Here's your divergence here at this level. As soon as Asia opens, I think it's going to wick lower. You'll see. Probably going to open here somewhere. Or it could even go higher. Could even open higher. But we'll wait for the market to open and see what happens. Sorry, guys. I'm using a much smaller screen, so that's why everything looks so fucking tiny. But yeah, that's basically it, guys. It's very simple, man. Inverse fair value gap. Yeah, so basically, hourly time frame. So you look at your higher time frames for your fair value gaps, right? So this is the main fair value gap that was holding the structure of the market bullish, right? Why do I say that? Because you see the wicks basically that tap into this level, treat it as a point of support. You see that we have bullish reactions out of this level. Price is unable to hold value above this level. So this whole range here was unable to hold price above this particular structure point. This is your fair value. So this is invalidated as soon as price breaks below it, right? So this is where the change of character actually happens internally, right? Then we have a pull into liquidity. We tap and take out an intermediary high, right? That means that this fair value gap is the inversion fair value gap, or it could even be looked at as the breakaway gap, right? A lot of people look at this as a breakaway gap. We have a supply zone, right? That price is breaking away from. So that makes this the breakaway gap, right? Then we have an inversion fair value gap, which clearly gets created here. So now what was previously a support zone was then treated as a resistance. So this is why we took a short here and we took a short here. Does that make sense, guys? Oh yeah, we're opening. Oh fuck yeah, we're opening 7 months, bro. So maybe I can give you guys a trade now in Asia. But yeah, so this is basically I'm looking for this. I mean, if we don't get respect at 3030 and price closes and breaks above again, it's probably coming to take out liquidity, right? Let me just put the session indicator on quick. Okay, it's open up 3. I don't know why my shit is doing this. Okay, so we've swept London lows, right? New York is coming for probably coming to rebalance this price league specifically, because this was an impulsive push to the downside, right? It was a profit take. So I think what will have happen ultimately is that price will probably, if it does respect 50% of this fair value gap, we'll probably have a complete exhaustion at this level, and then we can look to go short here on this. But I would like to see it come up to 3030. Otherwise, what's going to happen is we're going to get the first push, then London's going to probably take out Asia and then drop. If London takes out Asia, London taps into 3030 and then we drop. Okay. Any questions, guys? Any more questions? Please, man, ask me questions, man. My mouth is fucking getting dry from all this talking. But I want to answer questions, though.
Yo, Smash.
What's up, brother?
Man, I got a question, bro.
Yes.
When you're trying to look at where the price action is going, and you're trying to see the liquidity, you're trying to see, for example, gold on its push down,
Yeah.
when it went bearish. I was trying to look back to where I'm thinking it's gonna take out its liquidity, you know. So I'm trying to look backwards. How far
Yeah.
back do you have to go to assume or to make a prediction on, you know, where it's going to sweep it?
So this is why I used high time frames, right? Because I'm marking off my lows on the high time frame. So this, in essence, if price was going to continue bullish, right? This would be the protected low. This low of this particular candle, right? But underneath this particular low, right, we have fair value, high time frame. Okay, because this is an untapped imbalance or fair value gap. I mean, bro, again, patience, bro. Fair value gaps and imbalances are basically, in my opinion, bro, it's the same shit, right? I just look, I would say an imbalance would be something that has a much more impulsive move, like something like this. This is an imbalance, right? And a fair value gap is a level where price comes into and respects, like this, for example.
But what about breakaway gaps and fair value gaps then?
So breakaway gap is basically when price is breaking away from a supply or demand zone. And that sometimes you only are able to identify internally, right? But I'll get to that now. Let me just answer Chazzy quick, right?
Yep.
So anyway, you have this low here, right? So if price wanted to continue bullish, you see that price does push towards this low and then shows signs of respect, right? It doesn't immediately breach this low. But we know that for a fact that in order for price to continue the pursuit higher, right, we need liquidity. So because we failed to grab liquidity at these lows, right, the next day I already knew that because price was already or had already grabbed all of the liquidity at these two highs, right, by this sweep, and gave us an hourly divergence, basically aligning with a 4-hour and a daily divergence, or 4-hour rather divergence, right? That then gave me additional confirmation to say, okay, I'm no longer looking for buys, right? We did not tap into this protected low. How I know this is a protected low, coming back to Nico's question, right? Price failed to create a new low here, right? It created a higher low, right? Insinuating or inducing the idea that price was still bullish. So this is why during FTMO, if after Powell was speaking, right, price was pushing higher. This was retail pushing, institutions pushing retail ideology, right? Retail traders were the only people that were buying here, right? Because the assumption was that price needed to complete the price delivery target. So they needed retail to continue pushing in order to deliver towards their orders, right? So you see here, price basically, after creating the divergence, it sweeps the divergence, right? Then we create a supply zone. Price goes into consolidation at this particular level. Here. Right? And then as soon as we break outside of it, we leave a breakaway gap. Okay? We come back and respect the breakaway gap. We respect into a fresh supply zone. We sweep an intermediate high. Okay? Chazzy, this is answering your question. Where would you be targeting? You're targeting these lows, or you're targeting these lows. Because this low, you see this push higher, right? This push higher is basically sell side liquidity. Okay? Price does not tap into a fair value gap here when we created this push. Look
Oh,
here to the
Smash,
left.
can I pause you there for a second?
Yeah, no problem, brother.
So when you're targeting those lows, and perhaps on when you're doing your markup, the market still looked like it was in a bull run. Yeah, it still looked bullish. So if you were to assume, or just if you're thinking, okay, when it sweeps these lows, and you're trying to put a buy in, for example,
Like here,
do
for example.
you? Well, the massive bearish move that happened on gold just before the market closed, I marked it up. I was like, definitely it's not going to go bullish until it sweeps the low, but I didn't know which low. So I marked the most recent one next to it, that candle that's next to the bearish move.
Which one? Show me. Or tell me exactly prices.
Uh,
Like here?
it's the candle right, the one to the right of that, the one right next to the bearish where it drops.
Yeah.
Yeah, no, sorry. Where
Tell
am I
me, tell me.
looking? At the 6 o'clock mark.
6 o'clock. 6 o'clock my time.
Yeah. Move over to the right more.
Yeah.
Next to where the bearish drops, just
Oh,
before
you're
the
talking
end of
about
the.
here. Yeah, specifically.
Yeah.
Okay. Okay.
So
So in this case, right? So you see price creates an internal change of character, right? This is the change of character that happens internally, right? I'll show you. Change of character here. We pull back into the supply zone here. Okay. And we sweep the impulse, where the impulse move came from. We sweep it. Okay. You see that price comes back up to this level. So you could have bought, right? As soon as a change of character, we're not saying that you need to stick to one bias. This is why I'm showing you the strategy, right? Because ultimately, when there's a change of character or break of structure, right, price pulls back into liquidity. So you could have bought here as well because we are sweeping a low, right? You could have bought this. If this candle closed below this low, right, you needed to wait for price to either sweep this low or this low or these lows before you buy again. Do you understand? Sorry, hold on. I'm just looking at what the fuck this is doing. I don't want to miss a move here for you guys. Okay, so now we still have time. So on the lower time frame, we've got fair value here, right? So we'll wait for price to come up to this level first. If it doesn't come up to this level, remember this is still early, very early session open, right? So we don't want to assume that price is gonna move lower from this level, because price can immediately just stay or go into range, right? It could stay within this channel. We want price to fully exhaust, right? And we want an inversion fair value gap to be created. So in this case here, we want price to inverse this particular level and then pull back and respect it. If it pulls back and respects, right, we can possibly look for an entry to go short, right? And we'll be targeting these lows. This is now internally, right? So you see already we're in a bit of an impulsive push lower. Okay. So ultimately you could have entered on the like as soon as price impulsed to that level because it looked like it collected orders. But remember, because we are before a kill zone, this is answering Benji's question. This is a kill zone, right? What a kill zone basically is price basically showing notably a lot of volatility or volume, right? If there's no volatility, right, you can't look for an entry. Like for example, now this is before a session starts, right? But ultimately, you don't want to take entries now. You want to wait for price to come into the session start, so into session open. So you're waiting for Asia liquidity to come in. That's your kill zone. You understand? Or you're waiting for London volume to come in. That's your kill zone. Or New York volume to come in. Do you understand? So yeah, so Chazzy, yeah, bro. So basically, yeah. So as soon as price created the change of character, for you specifically, you could have taken buys up to another level of liquidity, which is at these points. Or this was the nearest point of liquidity at this particular level. You see, London highs was basically located in this area. Okay, as soon as New York opened, right, it basically failed to create new lows, right? This means that these lows ultimately is protected. Do you understand? So because these lows are protected, right? Price then continued to complete its overall price delivery target, which was to fetch liquidity and execute orders at these levels. So as soon as Asia came into this level, what did they do? Ended up fucking tanking price. So what we're trying to avoid now is we're trying to avoid being in that early liquidity. You see that impulsion can come from here. This is Asia open, right? Or this is market open here, right? Market could still give a nice impulsive move, but we're trying to avoid being swept like this. See, Asia, this is the kill zone, Benji. As soon as Asia opens, price comes up, sweeps liquidity, activates orders, and then it dumps in the bearish direction, taking out liquidity here. And then London, as soon as London opened, we had London be the consolidation. Price then go into further consolidation into redistribution level. Okay, Chelsea. Does that answer your question, bro? Or does it still not make sense?
No, it makes sense, bro. I guess it's just racking the brain around understanding, you know, the concept. I'll probably have to just relook and retest and keep journaling.
Yeah, 100%. I think it's you see the thing is, right? It's because for me, I use from a visual perspective, right? This is what I've been testing now over the last couple of days, right? This is not for everybody, but I do this because I want to understand what the market is doing visually, right? So here you can see that the market was in an uptrend, okay? But we just like a normal consolidation range, right? You have the median range, which is basically the 50% of whatever the range is, right? In this case, because we're in an uptrend, we also have a 50% range for the uptrend. We were failing to break beyond the 50% of this particular uptrend. Yes, price was still pushing higher, right? But as we pushed higher, we also gave divergence. Do you understand? And that divergence then led into an inversion fair value gap, right? Lower. Here's your inversion fair value gap, right? There's liquidity housed here. This is now because this inversion fair value gap was created. Yes, we didn't ultimately respect it, right? But this is basically to activate orders. There wasn't a lot of buying pressure here, right? I'll show you even the volume indicator. You'll see what I mean. See how the bullish pressure was dying out here? There was no bullish pressure. Instead, what you have here is a pickup of bearish pressure. You see what I'm saying? So these are things that you need to pay attention to, guys. Once an intermediary low is swept, if there's no volume, if there's no bullish volume is it died as soon as this candle was created. Look here. There was no bullish volume. Immediately this bearish candle came in. This is insinuating, if you know volume spread analysis or volume volume spread analysis, or just how volume works in general, you'll know that price basically, when you see an engulfing bearish candle like this is indicating to you that price, the spread of this particular candle is indicating that at a later point in time, price will push bearish. And in this case, we have a perfect example of that. It creates trend line liquidity, right? This is a bullish trend. This is also a bearish triangle, right? Price is, it's basically a rising wedge formation, right? Basically, first indication of trend change, yeah. So price then, again, internally, look, we have a bullish fair value gap here. And what does price do? It inverses it. Then comes back up to respect it, right? That's actually how I needed to mark it. Comes back up to respect it. There's your second entry. So you have divergence here. You have divergence here. You have a change of character here. Pull back into liquidity, or this is a break of structure. Pull back into liquidity, fetching fair value, delivering price lower, taking out intermediary lows at this particular level. Not fully tapping into, there's no fair value here, right? Maybe on the hourly time frame, yes. Or actually 4 hours, yes. There is fair value housed here. But now what is price doing? Look, again, coming back to why I said we don't immediately take buys yet. I mean sells. You see how we created this false representation that price wanted to continue lower? This is before the session started. So as soon as the session starts, right, and we get respect of this level, and we get an inverse fair value gap, we can enter. But we want price to tap into fair value, right? So where's our fair value located? We've got this breaker block here, right? We could even look for entry here as well. Sorry, guys. Oh my fuck. Okay, we've actually just broken respected above this level. You see? So it could potentially come into deeper levels of liquidity. But if that's not the case, and we have divergence present, as you can see here, there is divergence present. We just need for the last leg of the divergence to be complete. And then we need a proper inversion fair value gap to be created. Once that inversion fair value gap is created, this is the level, this is the main structure point that needs to be broken to continue the theme bearish. Okay, so you guys can even mark this low. If this low gets disrespected again and price basically breaks and closes below, we'll have a continuation low. But yeah, I'm looking to go short on us soon. Markets open. Jared. First indication of trend change. Yeah, daily fair value gap, brother. Says, hold on. What is this, bro? Yeah. Also, you see, the thing is, guys, like with actual price action, when the market is actually when there's no price action on the chart, like now, Like if price is just starting to move on the chart, right? You're going to indicate all of your highs and lows, right? So this is your target range. This is the range that we're in at the moment. I'm going to mark this low off, right? So I'm looking for closures below this low if I'm looking to go short, right? But I mean, the guys know me. I don't look for inversion fair value gaps. I'm waiting for price to exhaust. Once it fully exhausts on a divergence, right? I want it to come a bit higher and I want it to tap into fair value, right? Or it needs to take out an intermediary high. Okay. The highest point that I see here is at this level here. That's what I want it to tap into now, right? You can fuck around at this level. I don't care. You can stay within this level. You can trend bullish at this level. But as soon as it completes the divergence, that's when I'm looking to enter. So the last sweep into this level, when Asia opens, I want Asia to tap into this level and then dump. So my short will actually come from here. Okay, guys, questions? Or are you guys good?
Yeah.
Smash, I heard you speak on the last leg of the divergence.
Yeah.
How do you know? 'Cause sometime when I enter, I realize that I entered too soon on that divergence and might get kicked out of the trades. So how do you know when it's the last leg and for you to enter?
To be honest with you, that's an experience thing. I'm not gonna lie. That is experience. Like you're gonna have to have a lot of chart time to recognize it. I mean, there's times where I also get it wrong though. You know, it is difficult to predetermine, right? But it's a lot of chart time to know when
That's why we have
exactly.
the 50 pip stop.
Yeah, that's why you have a 50 pip stop, 100%. Yeah, and like Walker Boy is saying as well, yeah, it is discretionary. For me personally, it's because I'm an impulsive trader by nature, right? And because I've seen divergence happening on a reoccurring basis, I've been accustomed to it for so long that I know which ones are valid, and sometimes I don't know which ones are valid. But I'd rather, if I do take 2 losses, because sometimes I set myself like 3 trades in a day, right? And it's very rare that I reach my full 3 trade maximum threshold for the day, right? But when I do reach it, then I'll rather sit the day out because then I know whatever bias I had was invalid. Or maybe I'll wait if I take 2 short trades before a session starts. I'll wait for a session like Benji is asking about kill zones, right? I'll wait for the kill zone to happen, right? When that kill zone comes into play, like I'm waiting to see. Okay, for example, let's say this is all happening before the kill zone starts, right? Let's say this happens, right? This is my last leg. This will be the last leg. I want to see bullish pressure, impulsion into the zone, right? And why am I looking for impulsion into the zone? Is because I see an intermediary high here, right? And I also know that on a 15-minute time frame, there's fair value gap there, or this is isn't like a complete imbalance. But I'd rather have price come deeper into the level. You understand? So let's see 5 minutes. Yeah. So for example, like this. This is my fair value area, right? I can see now that price is, let's see on the 5 minute time frame. Yeah, look, we've now breached this level. Okay, on the 5 minute time frame now, I need that 5 minute to reverse. Right. So ultimately, what I need this to do is basically instead of closing above this high, like what it's doing now, I need it to sort of reverse. So the curvature on the 5 minute time frame needs to look something like this. It's very difficult for me to explain it to you. It's something that I see. I don't know why it's not allowing me to do this shit. Oh, it's because it's in a different color. So I want price to curve, right? And when it curves like this, it needs to give me the divergence. You understand? So you can see already now we're coming into a point of exhaustion, right? But we haven't tapped into imbalance. We have fully mitigated this imbalance that was created in the markets because of the profit take that happened, right? But internally, this is now going to be an intermediary high, right? We've already created two highs. This should be the protected high now. If it's not the protected high, what will happen is price will break and close above and continue bullish until it reaches a point of fair value or a point of exhaustion. So yes, again, it's discretionary. It requires chart time. You're gonna have to sit and watch the 1 minute time frame, 5 minute time frames a lot in order for you to enter. That's why you see when it comes into divergence on a 1 minute, like I don't take trades off of these divergences, of these 1 minute divergences, because for me, with gold, it has a tendency of pushing higher. Now you can see now we are again coming into overbought conditions. So we can test this theory, guys. If you guys want to take a trade from this level, as soon as you sweep this level, you guys can enter a sell. Or we can just, what do they call it? Tape reader. So we go entry here, 50 pip stop loss, 26 pips, 50 pips. The 330 is our area of interest. But remember, 330 was initially an area that we needed to break out of. You can see now on the 1 minute time frame, there's our fair value gap sitting there. That's our intermediary high. Because this is the impulse that created this push lower. So if we get a strong push to this level, right? If let's say we get a bullish closure above this level, right? I would exit this trade and then look for an entry here rather. Do you understand? So our first entry, test entry, we can test here. This is when I talk about test entries, guys. In the general chat, these are my test entry levels. I'm going to take a test entry off this level. And let's say there's an inversion fair value gap. Let's say price now completes this exhaustion. Okay, what it's doing now. Then it creates the inversion. Let's assume that this is the inversion fair value gap. If we get a positive retest like this, my second entry will be my full exposure. So first entry here, 50 pip stop. If we see body closures above this level, we're exiting the trade. We're waiting for price to fully exhaust into this level. Yeah, and then once it's done that, then yeah. You can see already price is starting to curve now. Let's see how this candle closes. I think it's going to push a little bit higher. It wants to take out these highs. And then eventually, once it gets to the deepest point of exhaustion, probably because it's still Monday, because we need to wait for buyers to be created, we'll be targeting these internal levels. And maybe the latter part of the week, then we can target the much lower levels, like these levels here, for example. But remember, guys, you guys only need to make 100 pips. Okay, and somebody had a question about risk management, right? How many of you here, you guys can just put ones in the chat. How many of you here trade 100K challenges? Yeah, Esteban, definitely, brother. Definitely, bro. Definitely a lot of room. Yeah, 50K. No, but 50K, I'll break it down for you, bro. Is it 50K CFDs or 50K futures accounts? CFD. Okay, wait, hold on. I'm seeing a bearish push here quick. Okay, we're respecting this breaker block here quick. Still don't trust the move though. 100K, 50K. Okay. Now that all of you have given me your accounts, right? Tell me what lot sizes do you use? How many contracts in terms of exposure do you use? If you're using anything more than one lot, you're using improper risk management. Jared, 50K, one lot on a 50K, bro. Okay, yes, I understand. With you guys, it's different, bro. You guys are live trading. and with because there's no spreads on futures, it's different. You can afford to have a one lot entry. 2 lots max on 200. Yeah, that's beautiful, bro. 200k, 2 lots is the maximum. One lot for 50k is quite much. Yeah, it is.
Yeah,
Yeah.
but our stop loss
Stops
is
are
under
tight, yeah.
10 pips.
Yeah, which is good.
So
And the reason why is because you guys are live trading, right? And like I said,
Exactly.
because you're live trading, you can afford to have that tight stop. But if you're not live trading and if you're receiving a signal, I can't give you a 6 pip stop if your entry is here. If you enter here and I give you a 6 pip stop loss, this push up now is gonna stop you. Futures risk about 120, yeah, 100%. That's your maximum risk in terms of trades, right? Let's say you have 5 trades a day. Each trade needs to have a stop loss value of between $125 to $250 maximum. If you're opening up one trade, let's say it's come into this level and it's fully exhausted into this level, and you believe that wholeheartedly that price is going to move very strongly away from this level, then you can have a one lot entry with a 50 pip stop. Because there are times where price will be devious and basically come into this level like this and then drop. And then as soon as it drops, then you can reduce your stop loss to this high. As soon as it creates an inverse fair value gap and respect it, you can reduce to this high. And then as soon as it moves away from your position completely, you can go break even. I don't think Banger uses more than 100k accounts, bro. Yeah, this is actually a fucking beautiful entry, man. Fuck sakes. Okay, but don't enter now, guys. I mean, we'll have to wait for Asia to start.
The risking or lot size depends so much on your setup as well. I will.
Yeah, it depends on the setup and how valid the setup is. Like if you're taking the trade now, right? I would say this is a B setup.
Yeah.
If this sweeps and completely exhausts and then gives a more impulsion from this level, I say this is more of an impulsive, an A plus setup. So you can risk more there.
I posted a picture in the chat as well.
Yeah.
If you wanna, I don't know, say
go
something
back.
about it or
Well, a trade that you've taken.
in the general chat right
Oh,
now.
general. Okay.
Yeah, the voice chat.
Oh, but I don't see it, bro.
I just posted. I changed my profile picture. Look for name.
Okay. Hold on.
Not the panther.
No, I'm looking
Nice
at the general.
picture. Wow. Not as cute anymore, Patience.
Yeah, it's time to get serious.
I made a hamster with huge muscles one time. I was gonna send it to you. Use this as your pick.
No, I'm changed.
Nice. I'm a changed man.
Smash, I will
Yeah.
DM.
Okay, so coming back to who had this question? Jamgo, coming back to your question. You see, whenever you see this is the last leg, right? We have this impulsive push to create the last leg, right? And that last leg completes the divergence on the 1 minute time frame. See? And then we have a push away. But see how quickly price is coming into oversold on the 1 minute. Which makes me or leads me to believe that price is probably going to go into consolidation before Asia. Yeah, you have to be dynamic, bro. If you're not dynamic in terms of your risk management, then you're fucking around for sure. Because pros will tell you, bro, you never risk the same lot size on every single trade. If you risk the same lot size on every trade, you're gonna hang yourself eventually.
Exactly the picture I posted in chat, guys. Look at it. It tells exactly what Smash is talking about.
Yeah, you're gonna have to know how to play, yeah, for sure. Everything's been about poker today, guys. Because that's really what it is. It's you against the institution.
Yeah, and remember, if you only have 3,000 drawdown in your account, you only have a 3K account, even though they're telling you it's a 50K. So if you're risking like 300, you're risking 10% of your account,
Yeah,
That's too much.
a
Yeah.
lot.
not
It's
1%.
a lot.
Yeah.
It's about
And you should
pocket
never risk more than
investment.
10%
Mhm.
Yeah.
on your capital.
Because when it bites you, it really bites you.
No, bro, I'm telling you. Yeah, so 250, like 125, 250. If you're on a spread account like CFDs, then you can go 500. But if you take that loss of $500, right? Don't just immediately re-enter, because I know that some people. I mean, I also do it as well, right? I'm speaking from experience, guys. I'm not just saying this with thumb sucking shit out my ass, right? Don't immediately enter the trade. Take a step back, review the markets. Even if the trade leaves you, like what it's doing with us now, it's leaving us at this point, right? But it's not valid yet because we don't have session liquidity in yet. You understand what I'm saying? This could range in this level. What we want to wait for is for Asia to come in. When Asia comes in, then we got all the necessary validation that we need, right? Right now, we're still part of New York. This is still part of New York volume that's coming in from Friday. Right? Price is just completing whatever it needs to complete here at this level. You see, this is the first candle into this level, right? We are respecting 50% of the imbalance at the moment. But price could still be dubious though. It still could come and respect above. So we wait. Mini is too big for one contract at times. Yeah. Micros, when you're trading micros, you wanna stay within, especially when you're building a buffer on your account. You want to do between, let's say, 2 to 5 micros when you're building buffers. Don't be like Rich Boy. Rich Boy fucking does 10 micros. And then he makes $8,000 in one day.
It's good until it's not.
You understand? Yeah, it will be good. It's good at the beginning, yeah. But if you continue that way, I promise you, it's gonna be nasty, bro. It's gonna be nasty. Yeah, you see now we're giving bearish signals now. Price created a bearish candlestick pattern. It's a gravestone doji. That's indicating that there might be some strong bearish pressure coming in now. Right? We're creating an inversion fair value gap. Okay, if we complete the inversion fair value gap, when Asia opens, we want to see Asia respect that inversion fair value gap.
I'm sure there was an entry on 5 seconds.
Yeah, 100.
There's always an entry on 5 seconds.
Yeah. And also another thing, guys, like look, like when you see price leaving levels like this, don't impulse entry. Honestly, there will be another entry. Don't be upset. Don't say to yourself, oh fuck, no, price gonna leave me. I promise you, I shit you not. Price will never leave you. It will never leave you. It will leave
It
you
always
when it's done this. When it's done this, yeah.
Yeah, and it always has to come back to take out the break even guys anyway. So
Yeah. This is an inducement. You're gonna see it's gonna come back and sweep everybody out.